long-term foreign currency issue rating to the proposed dollar-denominated senior unsecured notes, while Fitch Ratings gave the proposed bonds a BBB rating with a stable outlook. The Philippines raised $2.35 billion from its first dollar bond offering in April. ING Bank Manila senior economist Nikki Mapa said the government is possibly seeking more funds for the purchase of COVID-19 vaccines. The Philippines last week signed its first supply deal for the vaccine, securing 2.6 million doses from AstraZeneca. The government is also in talks with other vaccine makers. Now, overseas, the United Kingdom is the first country to approve the use of Pfizer and BioNTech's COVID-19 vaccine. This means that Britain would start vaccinating those most at risk by next week after it gets its initial 800,000 doses from Pfizer. The UK's swift decision drew flack from Brussels, where the European Union claims that its longer procedure was more appropriate at this point. Back in the home front, President Duterte has allowed the Food and Drug Administration to issue emergency use authorization for COVID-19 drugs and vaccine. Under Executive Order 121, COVID-19 medicines and vaccines may be used pending approval as long as there is credible data proving that it can stop, diagnose, or treat the coronavirus. Due to this approval, vaccine czar Carlito Galvez Jr. says our best case scenario for mass inoculations will be shifted to the first quarter of 2021. All right, let's hope that comes to fruition come first quarter of 2021, Dan. But another record high over in the U.S. amid that vaccine approval. Is this really it? The beginning of better days ahead?
The beginning of the end of COVID, Sana Jess. But, as you mentioned here, a lot of the vaccine euphoria might have already actually been priced in previously, and that's according to several analysts here. But you can still see some optimism here, in particular the S&P 500 up by 0.2%. That was already touching record highs na. And so, continuing a rally means that it's still continuing on that record high trend. But you do see the Nasdaq pulling back a touch. It seems to be that every time, investors are euphoric about a vaccine, the Nasdaq stocks, which were the best performers during the lockdown, seem to be taking the brunt. Now, you've actually got Asia seeing a bit of a muted start, not necessarily following the steps of the United States. You're going to be seeing the Nikkei 225, for instance, in Japan down by 0.2%. Over in Hong Kong, the Hang Seng is also down by 0.13%. So actually a rather weak showing, if I could say so, at least for most of the indices over in China, except for South Korea, which is seeing some gains. The Kosdaq up by 0.4%. Now, the market, this according to Alicia Levine, she is a chief strategist at BNY Mellon Investment. She did say this on Bloomberg TV. She says the market has almost immediately, after that vaccine news, priced in a better than expected 2021, especially for the second half. And she says that's what markets are seeing here right now. And there's a message here that better days are ahead and dips and consolidations are buys. So as you mentioned, you asked the question, baka, according to Alicia Levine, the better days are now ahead. Now let's see how our own index is performing. We have still managed to close above 7,000 levels midday yesterday. And although we are pulling back a touch, so we are down by 0.4%, it seems to still be a strong psychological level there. We're still at 7,049.85 and still in the past 3 days of trade. So this week palang, we've actually been up by 3 7/10% already. Now this according to Philstock's Claire Alviar, the improvement of the PMI, which we saw and reported yesterday, and actually 2 days ago na, boosted the sentiment even as it was in contraction territory. So it's still not above 50, but she does say that markets are now expecting the last month of the year, so December, that there will be expansion in the PMI. Another thing that Luis Limlingan from Regina Cap is saying is that this rally was improving because of the stimulus plan over in the US. So you've actually got a group of US lawmakers talking about a $908 billion stimulus plan, and he says that has improved general market sentiment. We had strong trades, but still below, the levels that we were seeing the past few days. But that was at 8.8 billion pesos worth of value turnover, still on net foreign selling, just, but that was trimmed
Mhm.
to 282 million. So foreigners selling out, but at a much slower pace than we had seen earlier on. I just want to take a quick peek at the Lopez group here, especially as that was the big news, diba, that they are planning to delist, or at least doing a tender offer for their shares. And they had priced that tender offer to from First Pacific Holdings at 25% premium. So that was actually at 3 pesos and 85 centavos. And you can see the stock rose up to 3.72 this morning. So that is still continuing that uptrend of up by 0.3%. I'll pull up the 3-day chart for you so you can see how it actually climbed by as much as 22% yesterday. I also just want to break a couple of things that might be moving markets this morning, and that is just fresh figures that we got from the PSA. I'm going to be pulling out the chart for you on the terminal, but that is
Mhm.
October unemployment rate. That is now at 8.7% for the month of October. That means that the unemployed was around 3.8 million pesos. But of course, you can see this in my terminal here. That's quite a drop from the peak that we saw at 17.7% in April. So still, of course, a lot of people unemployed. It's in the high single digits, but nevertheless, better than we have seen in the month prior, Jess.
All right. One other thing here that we want to take a look at, Dan, is of course one of our telco players here. They are, of course, the sector has been touted as the hottest lockdown stocks, and one second liner here is hoping to win the 5G race. Tell us more about that.
Okay, so recall that Now Corporation wanted to be a third telco player. They
Mhm.
did not get in that mandate, but they are still trying to be at least the
Yes,
fourth telco
they're
player
still in the
here.
space. Hmm.
They're still in the space, and they're going full speed ahead, particularly when it comes to 5G. I'll pull out the 3-day chart for you guys so you can see again how that stock has surged. What is the deal that's going on? That's going to be with Nokia. So they've signed a memorandum of understanding with Nokia Solutions and Networks Philippines for its network expansion plan. So they're going to be rolling out a 5G standalone network here in the market. Now, what is their strategy? This, according to them, expand the service to high-end markets. So they're now looking at high-end markets via 5G fixed wireless. And also because that's no legacy network, they shall actually do a standalone game, and they're confident, this according to them, that its consumers would succeed. Now, recall they'd already done a partnership with Vietnam's Vietel, and this brought them to a 6-week high yesterday. It was up by as much as 8.3% yesterday, and you can see that trading by 12.13% this morning to 4 pesos and 90 centavos. So we'll have more on markets later on, Jess, with our analyst Royce Aguilar. But moving on to the financial space, you've actually
Hmm.
got Fitch finally giving banks a confidence boost and now a positive outlook on the sector.
All right, so this time around, they are actually maintaining a stable outlook on Philippine lenders here. That's on the back of higher loan growth, at the same time, lower credit provisioning. But they're saying somehow that's going to be offset, going to be tempered by compressed margins and a lack of trading gains here. They are expecting, however, the deterioration in asset quality metrics to actually grow or accelerate come 2021. This especially since the 60-day grace period provided for under the Bayanihan 2 is expected to expire this month. That debt moratoria, again, is going to end December 2020. They are saying, however, that the dent in profitability may actually be cushioned by preemptive general provisioning in the preceding years. Just to contextualize things here, Fitch, of course, rates 7 major banks here in the country. Of those 7 banks, 6 have a stable outlook on issuer default ratings, or IDRs, while all 7 banks, according to Fitch here, their standalone credit profiles are actually under pressure due to the economic downturn brought about by the pandemic. So, question now is, where can actually the lenders expect a bit of a help here? Well, Fitch is looking at FIST, or the Financial Institution Strategic Transfer Act. They're saying an effective implementation of Fitch would actually help banks cut down on the build-up of unimpaired loans, making them poised for recovery after 2021. Fitch likewise is forecasting that net interest margins will be contracting or shrinking in 2021, following, of course, the BSP's 200 BIP cut, cumulative rate cut this year. They are expecting the BSP nonetheless to really maintain that accommodative monetary policy with interest rates already at historical lows here. But Fitch is saying as well that may somehow be offset by lower reserve requirements, which is eyed to fall under 10% by 2022 from the current 12% standing. Now, what about real estate loans now that property prices are moderating? Well, Fitch is saying that the impact will be manageable on real estate loan qualities, with banks more exposed to big developers with stronger financial backing. But should prices decline further, then Fitch is saying that's going to have a wider effect on the bank's balance sheets here, with property eating up as much as 20% of our bank's portfolio.
Okay, Jess. So you've got Fitch seeing some brighter signs here for the future, but you've also got Moodys at the same day downgrading two of our largest banks. What's going on?
Okay, this time around they're focusing on RCBC and PNB. They are downgrading rather their outlook for both lenders here. But nonetheless, they're also affirming their credit ratings. But why the negative outlook? It's primarily due to their higher exposure to retail and MSMEs. Of course, we do know that these sectors were badly affected or crippled by the pandemic. Now, focusing on RCBC, they're saying that is going to lead to a deterioration in their asset quality, especially in retail and MSME segments due to the pandemic. But at the same time, they are affirming the ratings, which they say reflects the bank's capital, which provides enough buffer for the bank to actually absorb some level of asset quality deterioration. Now, on the other hand, for PNB, they are seeing the same asset quality challenges here, but they are saying as well that PNB is in a stronger capital position to actually withstand these pressures. But the negative outlook at the same time considers events which a strong buffer may not be able to withstand altogether. But according to Moodys as well, both have actually baseline credit assessment and adjusted BCA of Baa3 from Moodys. Moodys at the same time saying that both banks have lower profitability when you compare it to their peers and represents credit weakness. But according to them, the likely deterioration in asset quality will impact the profitability through higher credit costs over the next 2 years. But nonetheless, they're saying funding from both banks has remained stable in the last few months amid the highly volatile environment.
All right, well, just a quick peek at the terminal here. Our financial sector still down by 23.29% year to date. All right, we'll take a quick gap, but we'll have more on the news when Business World Live returns. Stay with us.
Good morning. You're still watching Business World Live. I'm Jess Delos Santos. A construction spending level equivalent to 5% of GDP will be the so-called magic number that may drive economic recovery. That's according to Acting NEDA Secretary Carl Kendrick Chua during a forum arranged by the Construction Industry Authority. Chua expects a pickup in the sector as the government plans to ramp up spending on infrastructure projects to over 1 trillion pesos for the next 2 years. The official believes that targeting 5% of GDP is sufficient for the economy to rebound strongly, which will translate to a lot of jobs. Chua notes, however, that infra spending in 2020 has been lower than usual after funds were realigned to pandemic spending. Still, he expects a stronger rebound in the industry for the fourth quarter after posting an almost 40% year-on-year decline in the third quarter. Some good news for households to welcome in 2021. Customers in Metro Manila may expect lower water bills in the first quarter of next year. The Metropolitan Waterworks and Sewerage System, or MWSS, said the price adjustments will be effective starting January 1 until March 31st. Customers of Manila Water who consume 10 cubic meters or less will see a reduction of 76 centavos in their monthly bills. Those consuming up to 30 cubic meters of water will see their bills go down by as much as 3 pesos and 45 centavos per month. Maynila customers who consume 10 cubic meters would likely see a 5 centavo reduction in monthly water bills, while those who use around 30 cubic meters can expect a peso and 30 centavo decrease in their monthly dues. Last month, both water concessionaires deferred their respective water rate increases for 2021 under the rate rebasing adjustment approved by the MWSS.
Fifth grade students in the country are falling behind their counterparts in Southeast Asia in reading, writing, and math. That's according to a regional study. Data from the Southeast Asia Primary Learning Metrics show the percentage of grade 5 Filipino students who achieved minimum proficiency in those three learning areas was lower than that of Vietnam and Malaysia. Filipino fifth graders were at par or sometimes even worse than those in Cambodia, but performed slightly better than those in Laos and Myanmar. The study found that a majority of grade 5 students in the Philippines had a reading proficiency level equivalent to that in the first years of primary school. In terms of writing, only 1% of grade 5 learners achieved higher levels of proficiency. For math, it's around the same percentage. The regional study noted the need to prioritize early learning and implement progressive learning standards in basic education curriculum here in the Philippines. 7,000 has been a strong psychological level the past few days. What are indicators pointing at? Here to share with us his year-end outlook, we have with us Royce Aguilar of First Metro Securities. Welcome back, Royce.
Hello, good morning everyone.
Royce, just kicking off with that 7,000 level print, right? So it had been swinging between a tight range there, consolidating, some might say. But now it appears from a global level that we might be bullish moving forward. A lot of analysts are saying, especially with the approvals of the vaccine over in the UK, that this is the beginning of the brighter days to come. Do you agree with that?
Well, yes. Of course, it's a different case for every country in terms of the weight of the economic rebound, even the rebound in the stock market. But in terms of clarity moving forward, we are seeing more clarity in terms of course, a vaccine approved by the FDA is like just weeks away, possibly. So once that is approved, expect more countries to order, and once more countries will order more vaccine, expect the market to follow through with that positive development. So of course, moving forward, you will see the market base market movements solely from the vaccine. That's what we are seeing right now.
Mm-hmm. What are the downside risks, if ever, here? I mean, you've already got the government saying it's unlikely that there will be another lockdown, at least as hard that we saw previously. They're quite bent on reopening the economy. So what are the actual downside risks that have not yet been priced in?
Okay, so probably what's not yet priced in is if there is a second wave. Of course, besides the downside is in the second wave is the actual restrictions. Of course, at the end of the day, the government will act depend on the number of cases, and should the number of cases shoot up again, of course, we are seeing the trend in the US mainly because of the winter season, so more lower and higher chance of more cases. If that is the case also here, of course, we expect the government to act on it quickly, like what they did last March. And of course, that is your downside risk. And besides that, should there be side effects in the vaccine moving forward,
Okay.
that could also be your downside risk.
What about from the fiscal side and monetary policy side? Is there still room for optimism there that bigger fiscal spending could happen, or is this already what we have to work with? Especially as we're already towards the year end, budget hopefully will be approved on time. Is there still hope in the markets that there can be more help and aid to the economy, or have investors given up that hope?
I think one main catalyst is, yeah, the create bill. Once it's actually signed into law, once it's already being start implemented, that's a huge um, upside for corporates, especially on the valuations. Expect analysts to upgrade their forecast that once the create bill or law moving forward is implemented, because from 30 to 25%, that's a huge upside moving forward. So that could be the main catalyst moving forward on the
Okay,
policy side.
let's talk about the last few indicators that have come out. PMI, for example, in China was surprisingly high compared to it was expected, but here in the Philippines still below 50. But some are saying still better naman than the previous print. We also saw today unemployment 8.7%, and that is still way better than the 17.7% we saw. So but it's still not that great, diba? So is this still better than what we were hoping for, or is this still not the worst yet? The worst is not yet over.
Well, in terms of, we think the worst is already over. In terms of data, we want better improved numbers moving forward. Of course, what we're seeing now, especially with the PMI, that's a one good indicator. That's one good leading indicator. So of course, it's still somewhat in constructionary mode, given it's at 49.9. But moving forward, I think what we are doing here is that we try to collate all of the market data plus the forecast of the companies, and the forecast of the companies are much more optimistic compared to before. That's why we
Okay.
really think the worst is over. It's just a matter of right now how much will the economy reopen further. That is what the market is expecting or wanting to hear. So that's why right now, if there's no vaccine yet, we expect the market to consolidate a bit until they see better data. And
Mm-hmm.
if a vaccine gets approved by the FDA, then that's another catalyst for another rally.
Can we say the worst is over as well for the banking sector, because the loans, they've received, I mean, a lot of stimulus still, diba? The small and medium sized enterprises have received a lot of stimulus. Not everyone has closed and they haven't really, the NPLs have been just provisioned so far, so hindi pa siya natatanggal sa balance sheet. What's your outlook on that? Is it still going to take some time for it to recover, and why is the sector in terms of share price not recovering as the rest of the market?
Okay, so that's actually a good point. In terms of headline number, of course, right now the banks have already um, booked provisions enough for the next quarters. Of course, if there, what the expectation is, there could be higher NPL as those loan losses actually materialize. But in terms of the headline number, we think the worst has already been disclosed. In terms of,
Okay.
yeah, in terms of your core business, that could be your catalyst moving forward in terms of the better numbers. Of course, what has been dragging the banking sector in terms of headline numbers has been the provisions. And okay, again, based from the previous briefings we attended, several banks have already disclosed that they've already booked enough provisions. If they will book more provisions, it's significantly lower than what they already booked year to date. So in terms of headline numbers, the worst has already been disclosed already. So moving forward, we do expect some improvement. Of course, as your NPL is an exception, given that the loan defaults will actually materialize in the next quarters after the Bayanihan 2 provision.
Okay, so still some downside risks there for the banking space, but you believe that the worst is over. Let's move on to the property space. One actually just breaking here. You've actually got Robinson's land. I will try and pull that out for you. It's said to be picking banks now for its $500 million REIT IPO. How excited are you for this, especially since the REIT space is going to be concentrated on the commercial properties, business office spaces, especially for RLC, or even retail spaces, which have had such high vacancy rates?
Okay, so for the at the end of the day, of course, it's for us, it's net positive. We see the downside is given the current vacancy, the prospects even disclosed by the likes of Colliers and the like. But for us, at the end of the day, it will help companies, especially those companies with less exposure in the pogo space. At the end of the day,
Okay.
your pogo space is your risk moving forward, especially that could be your main downside risk. But moving forward in the next years, few years, even decades, that's how long these companies are forecasting in terms of their prospects. That's why we expect it's a good time to actually enter the space in anticipation of the rebound moving forward. There could be downside risk, of course, because of the vacancy, but at the end of the day, that would be temporary. We expect a quick rebound for that.
Just quickly on the REITs, because you've got Double Dragon, already booking it, and then you've got RLC. You've also got Vista Land. Any preferences for the three, or which are you considering here better positioned? Is it those that are more exposed to consumption and retail spaces, those that are, for, as you mentioned, office spaces?
For us, those who are exposed more in the office spaces and not that exposed to Pogo
Pogos.
clients. So office
Okay.
spaces more exposed to BPOs. Those are our main preference right now. So
Okay.
to be
Still,
specific with the companies, to be specific with the companies, RLC, again, RLC looks to be more attractive to us because in terms of data, they have one of the least exposure to Pogos, and plus they are one of the leaders in the office spaces. So we expect even their clients more to stay with them moving forward,
mhm.
given their market leadership and given how they have treated clients in the past.
And last question, Royce, before I let you go, what's happening with the Lopez Group? Is this something that you guys in the know as analysts were expecting to happen? This delisting after all of this news on ABS-CBN as well. But to what extent will its subsidiaries and the other companies under the Lopez Group that are trading be affected by this movement?
Well, for us, we did not fully expect specifically the delisting. We expected some action from the company. We did not expect the delisting, but of course, in after they announced it yesterday or 2 days ago, it made sense mainly because they have two holding companies already in the Philippine Stock
Mm.
Exchange, and then maybe it's better to delist the Lopez Group mainly because the Lopez Group has that exposure in the ABS-CBN Corp, which is the somewhat volatile business segment right now. Compared to FPH, only the energy, property segments are your subsidiaries there, so it's much more stable. So moving forward, the energy space, especially the ones owned by the Lopez Group, are actually doing well, especially FGen. They have a stake in Meralco, so we don't expect a sudden corporate action from the energy sector. So because they're doing well, so there.
So it's actually something that makes sense to you. Lopez shares now trading still below that tender offer price, down up by 0.3%, 3 pesos and 72 centavos. Thank you so much for those insights. That was Royce Aguilar for Spectra Securities.
Thank you.
And that's a first look into the business day. Today is December 3. I'm Danie Laurel.
And catch us again tomorrow at 9:30 a.m. I'm Jess Delos Santos. We are One News.